I'd like to take the opportunity today to remind everyone that at Kathleen Valley, Liontown has a world-class hard rock lithium resource located in a first world mining jurisdiction. And as Paul mentioned, I'm also pleased to be able to take the opportunity to update people on our Moora project, where our initial drill results from the maiden drilling program have been very, very good. The standard disclaimer, which I won't dwell on, but this presentation is available on our website, so I'd invite you to read it there if you are interested in reading this page. Liontown has 3 active projects in Western Australia. Our flagship Kathleen Valley project is located in central Western Australia. We've defined a world-class resource there of 156 million tonnes at 1.4% lithium. And a PFS that we completed in October last year has confirmed the potential for a long-life, high-grade mining and processing operation. We have a DFS in progress, and this is due for completion later this year in the fourth quarter of 2021. And this DFS will be looking at a number of other opportunities to enhance the financial metrics indicated by the PFS completed last year. We do have a second lithium project in southern Western Australia at Buldania. We've defined a resource there of 15 million tonnes of 1%. We've recently applied for a mining lease over this resource. And we'll continue to advance the Buldania project this year, but I won't be saying anything more about it during this presentation. At Moora in southwest Western Australia, we're located in an emerging mineral province. It's virtually unexplored. It's in the same region, as Paul mentioned, as the Julamar discovery, and our early results have been very good, and we continue to advance this project as we speak. All of our projects, or most of our projects, are wholly owned. They're located close to established infrastructure, and importantly, we're well funded to ensure that we can maintain the momentum on the projects. One thing that we will be updating as part of the DFS for Kathleen Valley is our ESG policy. It's obviously becoming more and more important to the industry. Our focus will be, of course, minimising emissions, water usage and ground disturbance, but we're also putting a lot of effort into making sure that any mining agreement we have there is mutually beneficial, not only to the local land users and traditional owners, but also to Liontown shareholders. You can see there we've added an E to the ESG, E for economic, because there's no point doing any of this stuff if we don't make any money at the end of it. Moving on to Kathleen Valley. Kathleen Valley is a very large hard rock lithium resource. It's top 5 by size in Australia. And I should point out, compared with the previous presentations here, we've now updated this to include the changes at Greenbushes and at Pilgangoora. But you can see there it's top 5 by size in Australia, and it's top 10 by size in the world. So it is a world-class hard rock lithium deposit. Another measure of the global significance of Kathleen Valley is that together with Buldania, and because we own our projects 100%, Liontown has the 4th largest spodumene-related hard rock lithium resource base in the world, which means we have the potential to be a significant player in the battery metal space. In October last year, we published an updated PFS. We had to update the PFS because the resource more than doubled from about 75 million tonnes to 156 million tonnes at a higher grade of 1.4%. The PFS assumed a production rate of 2 million tonnes per annum, producing on average about 350,000 tonnes of spodumene concentrate a year for 40 years. And this gave us an NPV of $1.1 billion and an internal rate of return of around 37%, and a short payback period of 3 years. One of our main focuses of the PFS this time around was to ensure that our operating costs were as low as possible in the first part of mining history at the deposit. So for the first 10 years, we've decreased the OPEX cost per tonne of spodumene concentrate to $345 a tonne, which is a $140 improvement on the previous PFS. So it's a massive improvement based on what we did before. And in the first 5 years, the OPEX is going to be closer to $325 a tonne. The spodumene price there of $739 a tonne is based on data provided by independent commodity experts Roskill. And the capex of $325 million includes a large proportion for mine pre-production. Importantly, you can see from this slide the total free cash flow will be about $5 billion over the life of mine of 40 years, so a very significant number indeed. The resource is a high quality resource. Of the 156 million tonnes, 80% of it is measured and indicated. So it's a good resource which hangs together well. At this stage, the resource has translated to a reserve of around 71 million tonnes, although we expect this to increase following some recent drill results from some geotechnical holes we put into the inferred part of the deposit. You can see from this slide that Liontown is envisaging a predominantly underground mining operation at Kathleen Valley. Now, the number one question we get from just about everybody is, can you mine lithium underground? So I've finally given up and put a slide into the presentation to explain why we're confident that we can mine Kathleen Valley using underground mining techniques. First of all, everyone needs to understand, and I'm surprised you don't, that lithium is just another commodity. You use exactly the same mining techniques to mine lithium as you would to mine anything like gold, copper, nickel, etc. We will be using conventional mining techniques at Kathleen Valley, so in the steeper dipping lodes we'll use sub-level stoping, in the flatter lodes we'll use room and pillar. The ground conditions are very, very good. In fact, according to our consultants, some of the best ground conditions they've ever seen. And the mining costs, which we've built up from a zero base, are close, if not better, than industry norms. There's a lot of underground mining expertise in Western Australia, as most of you would be aware, so we don't have to worry about a skill shortage when it comes to that side of the business. The other thing about mining underground is it allows us to be a lot more selective, which means we can minimise dilution from the iron-bearing gabbaric host rocks, which is the main source of iron, not the pegmatite. It also means that we can access the entire deposit, including the highest grade part of the resource. Mining underground also means that we can minimise our environmental footprint consistent with our ESG policy. For instance, mining underground, 50% of the waste that comes out of the workings will go back down to some sort of fill. So we're confident, and our consultants are confident, that there won't be any real issues, or won't be any issues at all mining the Kathleen Valley lithium deposit using underground techniques. The DFS will be looking at a number of opportunities to improve the financial metrics for the project. Simple things like resource conversion. We recently completed a small geotechnical drilling program. 2 of these holes were drilled into the inferred part of the resource. You can see there we got some good results, up to 40 odd metres at 1.6% lithium. This will lead at some stage to an update of the resource, which means we'll be able to convert more of the resource into reserves. The resource remains open along strike and at depth, but given that we've got 40 years of mine life, we're not rushing into increasing adding tonnes to the deposit, but the potential is there. The DFS will also look at doubling the throughput from 2 million tonnes to 4 million tonnes. This will obviously depend on market conditions, which do look like they're improving significantly and very quickly. And the mill will be designed in such a way that we can double the throughput without having to shut everything down. We also believe that we have the potential to produce a premium concentrate at Kathleen Valley, and the next slide will explain why we think this is the case. And subsequent to the PFS, we completed a scoping study on downstream processing, looking to produce lithium hydroxide or lithium sulphate on site. The numbers that came out of this were show-stopping, and it's something we'll investigate further as we go through the year. And I've got a slide just to highlight the upside of downstream processing later on. One thing we're going to do differently from most of the existing hard rock miners is Liontown will use whole-of-ore float to process the spodumene, or to process the ore. And we're doing this for a number of reasons. Test work shows that whole-of-ore float consistently produces a higher grade concentrate with better recoveries than conventional DMS flotation. And the graph in the bottom left-hand corner of this slide just highlights this. So if you look at the red lines there, the dashed line is DMS flotation, and the solid red line is whole-of-ore float at 1%. And you can see DMS flotation struggles to produce a 6% concentrate, which I think we see reflected in the current operations. But using whole-of-ore float, we can produce a concentrate at 6.5%, or close to 6.5%. And we see the same relationship for all grade ranges. So by the time we get to about 1.7%, whole-of-ore float produces a concentrate in excess of 7%. And I should point out the run of ore mine grade for the first 10 years is going to be around 1.6%. Another advantage of using whole-of-ore float is we can process all of the ore stream to recover tantalum. You can't get tantalum out of a DMS circuit. We recover the tantalum using magnetic separation ahead of flotation, which has the added advantage of which means we can remove a lot of the iron before ahead of flotation, so we end up with a better quality concentrate. So by using whole-of-ore float, we're confident that we can produce a quality concentrate which will hopefully attract a premium price. Downstream scoping, as I said, we looked at, or downstream scoping study, we looked at producing lithium hydroxide or lithium sulfate on site. If we just look at lithium hydroxide, which is highlighted in the red boxes there, you can see compared with just producing a spodumene concentrate, the NPV increases from about $1.1 billion to almost $5 billion, and the life of mine free cash flow increases from about $5 billion to $20 billion, and the payback period stays the same, around 3 years. Now, we acknowledge that we can't do this by ourselves. We will need a partner to help us, but based on these numbers, we'd be mugs if we didn't look into this opportunity further during the year. Infrastructure is fantastic. It's an established mining region. It's close to a sealed highway. There are established mining camps, there's power lines, there's gas pipelines, there's towns, etc. And in addition to that, most of the resource is located on granted mining leases. So the project couldn't be better located from an infrastructure and logistics point of view. This is a slide, is a hangover from the days when we had to work hard to convince people that lithium was a good place to be. Given that it was again talked about on the ABC radio this morning, I don't think we have to do that anymore. And production at Liontown is aligned to be, to match the increase in lithium demand as we go ahead. Very conservative timeline, which we think we can compress quite significantly. Currently, we have a DFS schedule for completion by the end of this year. Before the end of this year, we'll then follow the normal course of events, with the plan to be in production by the first half of 2025 at the latest. We believe we can compress this timeline by probably about a year and be looking to be in production by the first half of 2024. Moving on to Moora, it's a very exciting area. I suppose the key points of Moora is the project is located in the same geological terrain as the Chalice's Julimar discovery, which is about 90 odd kilometres to the south. We've recently increased our land position there to in excess of 1,000 square kilometres. We have about 400 or 500 square kilometres that we wholly own, and we've recently done a joint venture with Lachlan Star Resources, where we can earn up to 51% at the ground, about 600 square kilometres immediately to the west. There's been some historical work in the area, but really prior to Liontown being there, the area is unexplored. So we have 1,000 square kilometres and one of the most exciting emerging mineral provinces, not only in Australia, probably in the world, located about an hour and a half from Perth. We've identified 3 prospective trends that we'll be exploring. We've got the northern extension of the Julimar trend in the west. In the central part of the project, we have the Mount Yule Felton corridor, where early drill results have been very encouraging. We've intersected up to 10 metres, almost 2% in the bottom of a shallow air core hole. And further to the east, we have the Bindi nickel trend, where historic drilling by Poseidon intersected 21 metres of 0.6% nickel from surface. Just zooming in, this is the Mount Yule Prospects, where we've done most of our drilling to date. We've defined a very extensive area of anomalous copper and gold. You can see that the drilling is quite wide spaced to date, but in one of those holes we've bottomed in 10 metres of 1.9% copper. So very, very encouraging results from the very first program, which is hardly an exhaustive test of the system. So going forward at Moora, we've got a lot of assays in the lab, probably more than 2,000 samples now. We have to process these samples. We've recently completed an RC drilling program. We're waiting for those assays. We need to complete the originally designed air core program, which will happen in the middle of this month. And we've got a large area at Moora which has never been explored, so we want to extend the first past August sampling over those areas. And then we'll just see what the results are and plan more drilling. So why Liontown? Kathleen Valley, world-class resource. It will support a long life, high-grade, low-cost mine, and it's located in a great spot. Moora, very, very exciting area. We're in an emerging mineral province and our early exploration results have been outstanding. So just to conclude, corporately, we have a very experienced and well-credentialed team, board of directors and management, but this is one side of the business that we will be beefing up this year, particularly from a marketing point of view, to make sure that we can get Kathleen Valley out there to the rest of the world. And we're in a strong financial position. We have about $16 million in the bank. This doesn't include about $5 million worth of options that are well and truly in the money. So we're in a strong financial position to ensure that we can maintain the momentum, not only at Kathleen Valley and Moora, but also at the Buldania project. Thank you very much.
Thank you, Dave. A couple of questions have come in. A little bit of focus on the downstream processing option that you've outlined. Sure. Can you take us through how important that is to the project and why you're going down that route?
Well, answering the second part of the question first, the reason we're going down that route and investigating is that the margins are just fantastic. You make a lot more. You can see why the Chinese want it. You make a heap more money out of processing the spodumene into either hydroxide or sulphite than you do from just producing the concentrate, as I indicated, 4 times the capital free cash flow and 4 times the NPV. So the financial margins are just fantastic. The key, obviously, is making sure you've got the right expertise to be able to do it properly. There's no shortage of horror stories when it comes to processing spodumene around the world, but saying that, it's a very early industry, and I think we're learning. So I think it's going to become more and more important as the year goes on, but we'll be doing it steadily and slowly and making sure we do it right. And doing the test work we need to do to confirm that we can actually convert our spodumene into hydroxide, etc., etc. But I think it's something that will become more and more important to the company over the year.
And we just heard Ken Brinsden from Pilbara talk about the rising spodumene price.
Yep.
How would Kathleen Valley look as a spodumene operation today at the current price?
Well, I think it would make money at the current price, that's for sure. I mean, if the first 5 years the OPEX is $325 per tonne, and the current price is, as Ken indicates, around $450 and $480 and going northwards, then I think it'll look pretty good. Although saying that, I don't think we'd put it into production unless there's an incentive price, as Ken talked about as well, because you need to be careful about that sort of thing. I think a measure of it is that we were having a discussion with a group in Asia the other day, and they basically wanted the stuff now. You know, they're sort of disappointed that we still had a bit of work to do to get to producing spodumene concentrate. So, you know, I think it would work at today's prices, but we wouldn't put it into production at today's prices. But we're confident that the prices will go up, and we'll be able to get into production and make a lot of money in the future.
And moving quickly to the Moora project, a couple of people have asked questions about that because obviously there's been great interest in Chalice. A lot of Resources Rising Stars followers have made some terrific money out of Chalice over the past year or so. You said you have 2,000 assays in the lab.
Yep.
Do you like what you're seeing?
I'm not going to answer that, bottom line.
Well, aside from the assays, do you like what you're seeing?
Oh, listen, I think the early results speak for themselves. I mean, this is an area that's never been drilled. We've gone out and we've drilled, you know, holes 50 metres apart, sort of 40 metres depth. So we're testing probably 30 or 40% of the stratigraphy, and we're getting good numbers. So I think that just sort of indicates that to get good numbers with such wide space drilling suggests that we've got a big system. There's a lot of mineralisation around. We now need to do the work to zoom in and find the hot spot in the ore body. But listen, we're encouraged. We continue to spend a lot of money on the project. We wouldn't be doing that unless we thought that it was warranted.
So what every investor wants to know is, how long before we see the assays?
Listen, they're coming. So I don't want to get into timing and have people hold me to it. But listen, the labs are snowed under at the moment, but they're coming. So, yeah.
Terrific. Thanks very much, Dave.
Thank you, Paul. Cheers.